Hello, trader nerds. We start today. We're looking at the screwdriver, and the screwdriver has again normalized. It was out of whack for a long, long time, and now we have normalized between 20 and the 25 and the 35 area. So as long as it's there, you don't anticipate any big moves one way or the other. If we get too far down here, we anticipate a big move to the downside. If we get over this way, we thought we'd have big moves to the upside. But our screwdriver was broken. But screwdriver is back and looking pretty good. So we'll be eyeing that a lot more closely as we do our little stuff. So the market is down good. Got a little two-way action. We've been up, up, up. So down 0.85%. Really nice. Looks like we found a little floor right here. AD has stabilized. VIX is up at 18 now. And let's see if we can look at our big green monster, see if it gives us any clues as to where we're going and what we're doing. Okay. All right. Now, remember, my thing was that I thought we would, since this was the second time we'd come up here, I figured that we would go up to the 42.63, but it looks like we want to take a trip down first, and it's filling in some of these little gaps first. Now we're overbought for the fair value above or below. So this would indicate that we're probably coming here, but I still think over time, you remember we said it may be down, up, down, up, down, up before we go up into this area, but I still think we're probably going up at some point after we may test these areas though. So that's cool. Let's see what the linear regression channel looks like. Linear regression looks like, okay. All right, we busted past that little support line that I drew there. And so we'll see if we close below that or if we bounce back up. So that's one area of support. Then we got the 50, 100, and 200 moving averages, daily moving averages. So I don't know. We'll see. Well, it doesn't matter. It looks like we're just kind of flat, though, altogether, doesn't it? Market's kind of flat, which is a great environment. And this is why James has done the screwdriver used to, it would foretell the moves, man. Maybe it'll do that again for us. Yeah. So, I think everything looks good. All right. And this is why James has been successful this year, y'all. Look, it's easy to see. Look, it's been a pretty tight range market. That's what iron condors work well in. So let's see how we're doing today. Let's go back and look at our little thing here. Okay. Now, I wanted to make sure that everybody knows why I'm selling calls. I hate calls. I told y'all kill me or slap me if I ever sold calls again. The reason is because we went to a environment where we decided that we didn't want the volatility risk of those naked positions. We're doing defined risk trades. Okay. The defined risk trade is going to pump out less theta than a naked trade. So if I only did defined risk and I only did things on the put side, I would be putting on way more risk than I needed to have on. So what I've done is said, okay, I'm going to split the baby. I'm going to do some on the call side so I don't have to put as many contracts on the put side to get my theta to where I want my theta to be. That's the reason. Okay, so I want to make sure everybody knows it's not really a deviation in strategy. All right, Ed's got some stuff. Talk to us, Ed, about T-bills. What's happening? It's been talking some stuff about T-bills. Anything we need to know, Ed?
Yeah, I just posted the Treasury page that shows the yield curve. Mm-hmm. So as we've kind of been talking about the last couple of weeks, there was some buildup in the very short-term rate, especially the 4-week. As this tentative debt deal was not getting done, they're building in a higher rate in case there was a default. You'd get paid more while you wait for your money to unfreeze. So yesterday, the rate went from Friday 6.02 to 5.31. So it was down about 0.7%, which is a pretty good deflation of that rate. It's still 0.6 higher than at the beginning of the month. And I think that's because the market is seeing that there's a chance for another rate hike, which I've been kind of chatting about anyway. So I wouldn't be shocked if there's one next week. I don't think it's not a trigger point. I'm just saying that's what I'm seeing. And then if you go out to the slightly longer, and look, yesterday's T-bill Tuesday, you can still enter orders for these 4 and 8 weeks today. So it's also still T-bill Wednesday. As far as the 4 and 8 week, the longer term rates, longer term. So the 3, 4, 6 month and 1 year rates basically did nothing but maybe a little weaker or the same or a tiny bit stronger in some cases. So there wasn't a deflation of those rates with this tentative debt deal, which I think also says that the market is building an expectation of another rate hike. So we'll see what happens there. I just want to throw that out there. I didn't want to do a major disruption, but for the people, because I had a couple of people ask me about what I thought about, what are rates doing, why, yada, yada. So that's my explanation as to why. And again, it's still T-bill Wednesday. So anyone that wants to enter an order, it's there to be done.
Oh, Ed, we appreciate you keeping us up on all that stuff.
Oh, my pleasure. Thank you.
That helps us a lot. Okay, so for the month, y'all, we're up 1.15%. Praise the Lord Jesus. We're kind of keeping it that Bernie Madoff area, right? Where we're doing the 1% a month, that Bernie said he was doing, but we're actually doing it. So that's too bad. Let's look at our Greeks and ratios here, see what's happening. We're at 46 deltas, 63 theta, 46, 63. See what that looks like, 46, 63. Can y'all imagine if it wasn't for Ed, none of us would be doing T-bills. That's amazing. Ed, he's our man. He can't do it. Nobody can. Ed, how'd y'all's little date go last night for your 41st wedding anniversary?
Oh, thank you. It went well. We just went to a casual restaurant. We didn't get dressed up or anything.
Well, I see y'all had some shrimp there, Ed. That was looked really good.
Yeah, I had a fried shrimp po' boy, and my wife had, I don't know, some kind of grilled chicken Caesar salad thing.
Yeah, isn't it amazing? Men, I mean, we get the fried stuff. Women, they get the grilled stuff. Isn't that amazing? How that can happen sometimes?
That's why they live longer.
They do, right? Because we do dumb stuff. But I will say this, I think we enjoy ourselves a lot more than they do, though. Don't y'all think?
I'll give that a 50-50.
Ed, what would you do in this count? Look here. We got 46 deltas. We got 0.17 theta. We got 89. Look at this. That's a beautiful count. I don't think there's really anything to do.
I would set my alert for Friday to look at it again and not worry about it until then.
Yeah. I think because a lot of times, y'all, what we do is we just kind of we overthink these things. But I think this count's looking really, really good. Now, I would say, I think we could have done better. We are at 1%. But remember, this is the count that I don't know what I have on. I mean, I hate to be embarrassed like that, but look, I don't know what all this is. Let's see. We got that's a put debit spread. I guess those are all put debit spreads. What are these? 16 days long and 36.50. I mean, I'm like, I don't know what this is. I have no idea what this is. So, I just kind of freehand this account. So, I think for us freehanding and having no idea what we've got on, if we look at our ES trades, let's see what those look like. Our ES trades, that's what we're trying to balance out a little bit. So trade curve analysis, let's zoom into that. Look at that, y'all. Isn't that beautiful? Just gorgeous. Gorgeous, gorgeous, gorgeous. More risk to the downside, but I'm closer to the call side. Okay. We got down a little bit and we're up $13 when the market's almost down 1%. That's just beautiful. That is a thing of beauty. Just gorgeous. So let's just close it. Let's don't even tempt ourselves. Don't overtrade. Don't overtrade. And we love having the the action. We like action. Most of us in here, besides Stacy and Candy, are men. So we like the action. Women, they're much better traders because they're cautious and they're just deliberate, kind of like a snake, so to speak. 86,038, 86,042. Let's go with it. 86,042. Yes. 86,042. Praise the Lord. Hallelujah. let's see how we're doing over here. 86,042. So we made 86,042. We made 1.17%. So kind of like we did in the other account, right? We made 1.17%. Again, I'm not really happy with that because I would have loved to, but this is the one I have a little bit of trouble keeping enough theta in. I got to be more mindful of my position sizing in this one. So let's see how our Greeks and ratios are over here. So we are at -30 and 71. So what is that? 41 positive, 4177. 4177. And Eliza. How did I forget about Eliza? Yeah, Eliza. So 4177. There may be others that I just didn't think of. Oh, Karen. Yeah, we got Karen. Yeah. Bobby, you need to think about everybody. 41 and 77. See, just can't keep enough. I mean, I'm blue. This is why I should have been doing better in this account. We're at 17 or 18, and our buying power over here is 21,920, 21,700. 21,700. Okay, let's go look where our risk is in this account. So let's go to the Analyze tab. And really, rather than looking at the thing, it's easier in this account on your Thinkorswim accounts just to look here, right? So, you know, we're down 16,000 at 12% down. We're down 17,000. You know, this account, you could almost do an iron condor, right? Yeah, you could almost do an iron condor. So why don't we do something like that? You know, Tim, add a little juice into the old system here. So let's go to ES, and we'll go kind of like what James is doing though at 90-something days. It seems good to me. 92 days. And let's put us on a put spread. So at about a 10% probability being in the money, which would be 3,600 here. So let's sell the 3,600 and buy the 3,500. Hold your control key down. There you go. 5 and a quarter. Ta-da! Come on, baby. Feel me. We've been getting about $5 on them. It's kind of good too when you start doing these things. You kind of figure out what your credit's going to be, right? $5. There we go. In at 5. Okay, so then we'll do something on the call side too. You want to? So let's go. Now this whole thing should give me a little bit of short delta. So we've been going about a 6% probability of being in the money. So there's about a 6%. So we're looking at a 4650, 4750.
Hey, Bobby, I have a question for you.
Hey, Evan.
So your call side position is further away from the money than your put side, right?
My call side is farther away from money. Okay.
Lower delta on the call side?
It's got a lower delta, but it's closer to the money.
Okay. I'm trying to figure out how, if it has a lower delta, you're getting, you said negative delta in that position. Yeah.
So let's look at that. Let's look at it. Okay. So let me put it on here and then I'll show you. 3650, 4650, 4750, and it'll be easier for me to build it in Tasty. So we'll build it over there. So let's get this order in first. Okay, good. Got a nice premium on the call side. So let's go to the Tasty thingamajiggy here. And let's build one. Trade table. So 92. And let's go, what do we say? 10% probability of being in the money. So a 3650, 3550. I'm having trouble finding my stuff here. Let's go 3575, 3475. Okay. So that's got positive delta. And then when I go and put it in on my call side, we were going at about a 6% probability being in the money. So 4650, 4550, 4650, 4750. And it gives you a little bit of negative delta.
Okay. Yeah, that's more of what I expected, either neutral or a little bit of negative. You were saying it gives you positive, and I was not sure what I was missing. It's like if the put side is a greater delta than the call side, then you should get positive delta, not negative. But
Yeah, you would think that,
so
right?
it's pretty much neutral though. That's
Yeah, it's pretty neutral.
not bad.
Pretty neutral. And Evan, as much as I kind of like what you do, you kind of, you're light on the call side. You don't necessarily have to do a call for every put. And I kind of like doing it that way. It's just that I'm putting some on the call side because I just can't get enough. I'd be taking, I think, too much risk if I put everything on the put side, even with the defined risk, because that's the problem, right? You start getting, hold on a second. Let me show y'all something while we
So the defined risk, you're basically paying for protection for every naked you put on. So it would make sense that you can't only put things on the put side. I think what allows me to have such a big ratio of puts to calls is the fact that I'm still doing the debit spreads. So those debit spreads provide the downside protection, and that allows me to put more on the put side without being way off balance.
Yeah.
So
I agree.
think that you do need something to kind of protect your downside a little bit. For you, it looks like you're going more with calls since you're not doing the debit spreads anymore.
And that's an interesting observation. I think that what I'm going to do is I want to keep doing some of the put debit spreads, though. I mean, I kind of like them. And I think when I've got a little, like in that one account, I've got 0.17 on my theta. I think I could do that, right? I think I could say, well, let's just borrow a little bit from my theta and go and buy a little bit. So I think I'm still going to do that. What I need to do is be mindful of my spreadsheet. So for example, my spreadsheet today, let's see if I think some of my things are coming off today. Let's see now. Hold on. Let me fix this. Just show my open positions. Yeah. See, so I've got 3 debit spreads that are coming off today. So, what I need to do is probably, once I get my account up with enough data, is start putting some more of these on. I've still got a number of them on. So I still want to include those into the mix. Definitely. I like them. I like them a lot for the downside protection they give us. Okay. So let's go back to that account. So we got this account done. So everything's looking good. Up 1.17%. We just had that one little, bad little month where the volatility got us. But we're kicking good. I want to see how we're doing in our final account. Oh, let's go to the Analyze tab really quick, like. So, it looks like you've got, $44,000 of risk on a 20% down move. Now, I had that in the smaller account. That's what was killing us, right? And so what I like now is when you do these ball steps, what's this? You'll see that the risk doesn't really change that much. So here's at the money, 512 down here. See, the risk, this is why we did it. Look, the risk is pretty much the same thing as it is down here, rather than this being $80,000 or $100,000 worth of risk. So that's kind of why we did that. The risk is what the risk is by being defined. Let's go to the final account. The risk is what the risk is. Bobby, you are a stud. 35,907. 35,907. We're so close to 36,000. 35,907. 35,907. Fire up the band. Rico.
Well, we're moving on now. To the east side. To a deluxe apartment in the sky.
All right, so 35,907. Yeah. Well, we kept enough theta in this one, but we didn't do too good, did we? I don't know why. That's interesting. We did 1% in the other accounts, but this one only got us up 0.55%. Hey, it's positive. I'm fine with that. So good there. Now, when you get the next spreadsheet, I did this other thing too. I did a little thing that keeps up with the put credit spreads and the call credit spreads. I kind of would like to have, you know, 2 puts for 1 call. So I'm close to that ratio. So let's go see what our Greeks and ratios are over here. And come here, little feller. So negative 25 plus 50 is negative 25. So say, or positive 26. 44, 26, 44, 26, 44. Okay, we got enough theta. Beautiful. 17. And our buying power is 11.2 plus 2, so about 11,000. Beautiful. That's great. Look at that. Using 30% right where we need to be. We're at 0.12. And theta, I mean, deltas look good. So let's look at our risk in this account. Yeah, and this is the one I really remember. When we would go to the Analyze tab and you and I would go down here to this 20%, this was saying negative $50,000. And I was like, crap, this is only a $35,000 account. If that were to happen, we're going to be blown out. That's why, especially in this environment, we went to the defined risk. It just made sense to limit my downside risk. So 23 there, 22 there, bingo. Volatility no longer hurts me to the downside. I mean, it's going to have a little bit of effect, you know, here and there, but for the most part, it's not going to hurt us at all. All right. And what's fun to do is to go and take, let me go to the other account. It's got a bigger theta, right? $83. And it's fun to run this number and watch this. Let's see. Watch the P&L on the open. Well, let's do this. Let's do the P&L on the day. There we go. So to watch that number go, to watch that number, boom, 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 boom. Right. This is what we're finally getting with these spreads that were put on. So, you know, you're looking at everything hangs out, you know, in 10 days or so, you know, we're up $800, $900, $1,000, $1,092. Now that is if everything kind of works and cooperates, right? But you see that beautiful theta decay coming into that P&L per day. Beautiful. And your break evens every day are spreading out. The more that things look at, see that once these things get farther and farther apart, your break evens move apart. Boom, 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 boom. Next thing you know, you're up $2,800. So I like the trajectory that we're on. Really like it. All right, anyone got any questions about anything? Everybody doing good? It's boring trading, y'all. I hate it. It's extraordinarily boring. You know, I know some of y'all need 0 DTE exposure just to have the fun of it, but this is just kind of like watching paint dry. But I like it a lot. And I really like it that my losses are defined and the volatility spike, it's not going to hurt me as much at all. I really like that. All right, guys, y'all have a wonderful, wonderful day. I will see y'all tomorrow.